Okay. All right. So, good evening, everyone. Welcome to the Smart Candles 3 months class. Please, if you can hear me, let me know in the comment section. And if you can see my screen, please let me also know in the comment section before I proceed. If you can hear me, let me know in the comment section. And if you can see my screen, let me also know in the comment section so we can start immediately. Okay. Since someone's saying he or she can't see my screen, please, if you can't see my screen, please leave and join again, because I think I see everyone is saying both working fine. Excuse. So if you can see my screen, please leave and join so that we can start immediately. So let's say we'll be starting at exactly at 8:05, so that let's say within 2 minutes, so that other persons can actually join. And if you're having any technical issue or network issue, get it figured out before 8:05. All right. So while we are waiting for this phase, for some persons to actually join and for the rest persons to actually maybe take care of their network issues and others. So, all right, let me go and grab my writing materials. Yeah. So if you haven't gotten your jotter pad or whatever you're using for documenting this class, at least this is going to be a recorded section, so they can always check back on the channel to actually go through them, and whatever you missed during the classes, you get to go through the video and learn again. So once again, officially, let me once introduce myself. Welcome to the Smart Candles. My name is Godson, and I will be your tutor throughout these 3 months on this channel, teaching and explaining everything about trading you need to know, from beginner to advanced. Whatever you've already known about the chart, whatever you've already learned so far, I want to keep that aside, and let's start from the scratch. Let's start from the very beginning, and I want to walk you through this process. Okay, so going straight into it, this is going to be a beginner class. So we are going to be taking everything from the beginner level. So if maybe you've been introduced into trading, you've been introduced into charts before now, and you feel whatever I'm going to be saying in this class won't make any sense to you, please allow others to learn properly. It's very, very important, because a lot of people here, they have no idea of what they are learning here. A lot of persons have no idea of what they are going to be clicking soon, and that's why we are here to actually give her the value they need. So without wasting much time, on my screen you can see we have market structure. So basically, as a trader or as someone that is interested in actually knowing what trading is all about, I want to actually before I proceed, I want to know what you actually want to achieve at the end of this class, or why you actually joined for this class. I want to know in the comment section, what is your target? What do you want to achieve, or what do you want to learn at the end of this class? Let me know in the comment section why I proceed. Okay, so what we have here is called trading view. what you see on my screen is called what? Trading view. And what do we use trading view for? Trading view is a trading platform you use for what? Your technical what? Analysis. This is where you come to what? Do the chart drawings before what? Going to place that trade on what? The live market. You can do that on your MT5, you can do that on your MT4, any of your trading app. But doing it on TradingView gives you, let's say, more clear view of what you're actually looking at on the market, and it's flexible. And what if you don't have an account with TradingView, you can see sign up on tradingview.com. It just requires what your Gmail or your Facebook or whatever you want to use as your account, and whatever you do on this platform, it's safe. It's safe. So let me say, okay, for now I have market structure mastery on my chart. Even if I should close this site and come back, I will definitely still see this because what? I have an account. So do where to create an account. Now I'll be walking you through few tools we'll be working with. And these few tools we'll be working with, they are just the basic ones you'll be needing. I don't want to complicate the whole process as time goes on, and that's why the class is a 3 months class. So what? As time goes and as you practice, you will definitely be introduced to more tools, and you will get to actually understand what they are actually for. So I will just do a quick introduction to some of those tools before we get to dive into today's topic and the main reason why we are here. All right, so here on TradingView we have this section, and this section, as you can see, let me put on my highlighter. All right, so at this section here we have, you can see we have USD JPY. So at this point, this is where you type in the pair you want. If it's Bitcoin you want to trade, type it in here, whatever you want to, whatever currency or whatever commodity or instrument you're looking for. This is where you get to search it, and it brings out the chart for you. After that, the next thing we have is you can see we have 1 hour here. This is where you have your time frame. For those that are using phone, except you're using web, if you're using web, you will have this similar template with what I have here. But if you're using a TradingView app, your template will be different from what I have here. So here is your time frames, and as time goes on or as we proceed, you will get to actually see what it looks like. Now basically this time frame is like how you want to see the chart present itself. So if you put the chart on a 1 hour, you will see the chart on a 1 hour, on the 4 hours. So basically each of these candlesticks you're seeing, depending on the time frame you're on, it means that that one candlestick, if it's like on a 1 hour, it means their candlestick will be showing on a 1 hour. After this, we have the next column, which is how you want your candlesticks to appear. All of those things you will get to see it. After that, for what you need, you don't need the indicator. If you're using premium, that's when you have this alert and replay. So let's come to the main tools. If you click on this icon here, you see you have your trend line, and in trading you can't actually do it without using your trend lines. So you have your trend line, the ray, and the lines you'll be using more, you'll be using your trend line. The next line you'll be using more is your horizontal line. You have your horizontal ray, the vertical line, and maybe your parallel channel, depending on what you want to actually look at for. The next thing you'll be looking at for here again is your forecast or projection, where you have the long position, the short position. For now, just these two is important for you. Then you come to your shape. You have your brush, your arrow marker, arrow, rectangle, and all of those things. All of these things you will get to see me and how I get to use them, because just mentioning them, it won't actually make a sense. But when you stay true the class, and that's why I say what, come prepared and come with your questions, so that whatever you don't understand, you get to ask and we'll get to what, answer them live on during the classes. All right, so diving straight into today's topic. So on today's topic, we have what, market structure mastery. Now, when you're talking about market structure, what do you mean by market structure? Please take note because the class has started officially. Talking about market structure, what is market structure? In a simple term, market structure is the way the market moves. In a simple term, market structure is the way the market moves. You don't need to complicate it. All right. So now let me go to our chart so we get to understand what I mean by that. All right. So we said market structure is the way the market moves. So if you look at this point, this market moving from here to this point and the market coming back down, all of this movement is considered also as what, your market structure. So that movement in the market, that pattern in the market is what you consider as what, your market structure. I don't know if it's making any sense. So that structural move, that entire movement, if maybe the market is moving from this point to this point, comes back down, continue to the upside, pulls back down, all of these patterns, all of these movements you're seeing like this to the upside is what you consider as market structure. Now, we have three types of market structures. Market structures are subdivided into what? Three. The first one is what? The bullish market, which is also known as what? The uptrend. Bullish market, which is also known as what? The uptrend. Let me get to write that out. Then we have the bearish market, also known as what? Downtrend. Then we have the what? The last one, or the third one, is what? We have accumulation or consolidation. Accumulation or consolidation. Okay, let me drop this properly. All right, so I believe everyone can see this. Okay. Okay, so we have the bullish market, which is also known as what? The uptrend. We have the bearish market, which is also known as what? The downtrend. And we have what? The consolidation or what? Accumulation. Those are what? The three phases or the three types of what? Market structure. All right, so now since we have these three types of market structure, let's go into the chart to actually what? Understand what we mean by what? A bullish market, or what we mean by what? A bearish market, or what we mean by what? Consolidating market or accumulating market. Please, I want you to actually what? Take down this point, and I want you to what? Draw the diagrams correctly and properly, because what? Trading is risky, and that is why we are here to make it what? Look easy, so you'll be able to what? Avoid some mistakes. All right, so talking about the uptrend, let me get to put up an illustration. So let's say we have this point, we have this diagram, we have this, So in this scenario, this was what? Our low. This was our low. And what? This was what? A high. This was what? A high. So at this point, basically what you want to see in an uptrending market is what? Creation of higher highs. Creation of higher highs. That is what you want to see in a bullish or uptrending market. You want to see the market what? Keep creating what? New highs, pull back, create what? Another high. I don't know if you get. Now, if you look at this was the low you had. This market moved up, came back down, moved up, pulled back down, and what? Moved up again, taking out what? This high. So in a bullish market or in a bullish structure, the market creates what? New high. You want to see break to the upside without what? Violating the previous low. Please note it. In a bullish market, you want to see the price create what? New highs without violating what? The previous low. That is what you mean by what? A bullish market. Now, let's come to what? The bearish structure. What the bearish structure looks like. So on the bearish market, this is what you have. And price what? Pulls back to that point. Continue to the downside. And what? Pulls backward down. And continue to the downside. So in this downside is just the opposite of what? The bullish market. What you're having here is opposite of this. So what? At this point, you want to see price keep breaking what? Lows to the downside. Breaking lows towards the downside. So the more you break lows to the downside is the more what? You said what? The market is considered as what? A bearish market. So in a bearish market, the market takes out what? Previous lows without what? Violating what? Previous highs. So if this market should violate this point, it means what? The market is not turning what? Bullish. You will get to understand it when we get into more complex setup. But I just want you to understand the basics, because it's from the basics that what we'll get into what? The complex setup. So I believe you'll be able to actually what? Understand what we mean by what? A bullish market and what? A bearish market. A bullish market and what? A bearish market. Now, talking about consolidation or what? Accumulating. Just as the word consolidation, when you're talking about consolidation, you're talking about something like gathering at a point. There is no distinct movement. It's just within a range. It's also known as what? A ranging market. So, okay, now let's give an example of what we have as what? A consolidating market. So, talking about a consolidating market, this is what you have. So basically, there is no clear what? Direction, or there is no clear what? Breakout. The market is just within what? A particular zone. I don't know if you get. Now, if you see within this one, the market was what? Expanding to the upside. It keeps what? Pushing to the upside. At this point, the market was what? Kept on what? Breaking to the downside. Then at this one, there was no movement. It was kind of like a stagnant movement where what? The market will move from this zone, get to this zone, it will bounce back down, it pushes up again, then what? Bounce down, it pushes up again, just within that range till you eventually what? Have a what? Maybe a breakout to the upside. Now, let me get to actually what? Let you know what you should do when you have a ranging market. When you have this type of scenario or when you have this type of market, the best thing to actually do is what? Look for something else to do. Leave your chat. The best thing to do when you have this type of market is what? Leave your chart. Because what? A lot of persons actually want to click buy or sell. When you have a ranging market or accumulating market, you don't need to do anything. The best thing you can do for yourself is what? Just stay away from the chart. Alright, so let me take you to the real chart example. So we'll get to what? Identify what? A bullish market or uptrending market, and we'll get to what? Identify what? A bearish market, which we will now move on to looking at what? A consolidating market. So okay, now, so let's get into the chart. We'll do like maybe take like 3 examples on each of them before what? We'll get to Alright, so now let's start from the bullish market. So let's assume this is our origin we are working with. This is our origin we are working with. And from what I said what? We want to see what? The market keep on breaking what? Highs to the upside. So when you come to the chart, the first thing you want to do is what? Mark the lowest low and what? The highest high. That will give you what? A trading range. So you get to actually understand if you are bullish or you are bearish. We will look at all of these structures on what? Different time frame. The 1 hour, the 2 hours, the 4 hours. So you get to actually what? Understand what it actually looks like on different time frames. Okay, so here on the 1 hour, this is the range we have. This is the range we have at this point, this place. So we'll be working with what? We'll be working with this high to maybe probably to this point to actually see just for this example. So let's say to this high, we have this high. Now, I explained something. I said we don't want to see the market what take out this low. That's to tell us that what the market is what? The market is bullish. We don't want to see the market take out this low. From what I explained in the diagram I drew. So at this point, the market pushed up, giving us what? A high. So we have this high here. What did you see? After we had this high, the market pulled back down before what? Coming to break it at this point. Before coming to break it at this point, breaking it at this point gave us what? A new high. Take your mind back to the diagram I drew, so what? You don't get to miss out. We now have what? This what? New high. After having this new high, what was the next thing you want to see? You want to see either what? Price retracing or price continue. It has to take out this high. You don't want to see whatever this price is doing, the price shouldn't take out this low. The price shouldn't take out this low. Now, if you notice when this price was moving, you see there was what? We had what? Pullbacks or retracement to or correctional moves to the downside. But what happened? After each correctional move, the price kept on what? Breaking to the upside. Now we had another what? Another break at this point to the upside. What did you see? Another push to the upside. So within this point to this point, this market was what? Bullish. That is something you have to understand. Within this point to this, we had a bullish market. And you being able to actually understand the type of market structure that it's right before you on your chart or it's being presented before you, it's a plus. Once you're able to understand the market structure, I think the major work you have to do has been done. Because knowing the market structure or the directional bias is what will actually help you to actually know if you should be looking out for bias or sell. So let's say we'll come to the chart, we're seeing this type of structure. Basically, what we have to be thinking about is we want to look out for what? Possible buy opportunity. I don't know if you get that. So that's basically what we'll be looking for. We want to see what either the market pull back and we'll be looking for what possible buy opportunity from our zones. All of those zones will get to be explained better. But I want you to actually what understand what the market structure. Because this is the basics to whatever we'll be building on. So now we have this. And where is our last low? This is the last low. This is the last low that we had. So after having this last low, I want to use the same chart to explain the what bearish scenario. So after having this last low, what did you see? The market came back down. Our rule was what? We don't want to see the market violate what? The last low. Now, within this range to this point, we are what? We are still bullish. But what? Internal this thing within this point, if this low is taken out, it now tells you that what? The market is bearish. Get it? Now, we are now what? Bearish and turning bearish, which tells you that what? The market is no longer buying. The market participants or what? The institution have now turned the market to what? Sell. They're now looking out for maybe people have now started what? Taking their profit. Now, what causes sell in the market? Just like let me say for the crypto traders, when you have an asset and people start selling, the community starts selling, that is what you will now see what? The market will start dumping. What pumps the market? News events, money, which is also known as what? Liquidity. That's what moves the market. Money. Alright, so now the market violated this low, which now tells you that what? You're not in a bearish market. You're not in a bearish market. So what is the next thing you want to see? You want to see confirmation. The market should come to what? Violate this next low at this point. So at this point, you have what? Another break again to the downside, taking out what? The previous what? Low. Just like what I explained in the diagram, I said what? In a bearish market, the market will keep on taking what? Previous what? Lows without what? Breaking what? Above previous highs. You see, now we took out this point. The market gave us what? A new high without violating this high. This high is protected. We have this one. Now the market now pushed down, gave us another what? Break at this point to the downside. After giving us this break to the downside, you see we had the what? A new high. This low was violated. So in a bearish market, you want to keep on seeing what? Market breaking what? Lows to the downside without its high being violated. And upon having a violation of its high, that now tells you that what? The market is turning. There is a turn. There's a change in market direction. I believe you understand what I'm explaining, and if you're following, if you actually understand the structure of the two structures I've actually explained, the bullish and the bearish structure, let me know in the comment section before I proceed to the consolidation or accumulating or ranging market structure. Let me know if you are cleared on the bullish and on the bearish structures. Let me know if I would take the next structure again. I don't want to get it complicated and I don't want you to miss out. So if you are not following up on anything, please let me use the comment section. I want us to flow. I want us to relate. So let me know in the comment section if you are following or if you are lacking anything. Let me know. Okay. So now let's check out something on a different. Okay. I understand you. So I'm clear with them. Okay. Now let me look for another let me look for another bearish structure. Don't worry. Let me look for another bearish structure. Let's look for another one. Let me look for something that is not complicating. All right. So let's just work with what we have here. We have this high. We have this high. Okay, I'll explain the violation part. Okay, so now let me just do a recap on a bearish structure. So this is our high. This is our high. And where is the last low that created this high? This was what? The low. This was the last low. This was the last low at this point. This was the last low. And what did you see? There was a violation. What I mean by violation is what? when you were expecting what this low not to be taken out. That's why I drew those diagrams from the start. So you won't mix things up. Now, this was the low that has been what protected. What I mean by protected is what it has not been broken. Now, what happened? You were expecting the price to come back to maybe this low and what push up. This is what you were expecting. This price, you see, we took out this high, the price pulled without taking out this low. It continued to the upside again, and what took out what these highs to the upside. Now we were expecting the market to take out this high where I have this line drawn. That's what we were expecting, the market to take out this high. But what happened? The market pulled down, retraced up before what taking it out. So once price takes out the low you were expecting it not to, yeah, that's what we have, or that's what we call what a violation. That's a violation. Now, if this price continues to the upside, then what? It's an uptrend. The market is still in its right structure. That's it. So, for the fact that what this point it's not violated or there is no shift, then what? The market is still in an uptrend. But once you have this point broken, that means what? There's a violation. The market is no longer bullish. The market is now bearish. So now you see, we now have what? At this point, we now have this low and we now have this high. So let's get to market together. Look at this high. That's a high. And from what we're expecting, we want to see the market take out this low. You see, the low was taken out. After taking out this low, where is the high? We have what? We can still decide to use it as our high, but the immediate high is at this point. And the next thing is what? You see what? This low is what? Taking out. So in a bearish market, you want to see the price keep collapsing to the downside. If that gets to give you what you understand. So what? Now we have a new low form. To confirm that this market is still in a bearish trend, we want to still see this price what keep on what breaking this low. This low. Yeah. To the downside. That's what we want to see. To the downside. And if this price now comes back to what, maybe take out this high at this point. Let's say something like price comes back, push above this point, then there is what? A violation. There's a shift in the market structure. There's a shift. So after having a shift, you want to see what price come back to that zone without violating this point. Then what? Push up, retrace back down to the other block, and what? You should continue to push to the upside. That's what you have as what? A what? Bullish other block. Sorry, a bullish what? Structure. Now let's come back to explaining, at least for those that were asking about the bearish structure. I should do a recap on the bearish structure. I think I'll be able to actually what explain the bearish structure. So now let's look for another one on a bullish structure, so we get to actually what understand before moving to what a consolidating market. All right, so we are on, let's get to mark our range. Let's say this is our last low. Let's use this as our low here, and I just want to mark the bigger what structure. So let's say this was the last high at this point. Now what did you see? What did you see? This is what the last high. This was the last high, and this was what the last low. We want to see this price take out this point for us to actually confirm that what we are in what a bullish market. So what did you see? Price what took out this point. Taking at this point, this tells you that what the market is what has shifted. We are now what in a bullish market. So the next thing we want to see is what we want to see price actually what take out this high again and what continue to the upside. Now if you look within the substructure, you see that what price is able to take out this low, but provided what whatever price is doing within this point, from this point to this point, without taking out this point, the price is still bullish. That is where we now have what? External and internal range. I will get to what? Explain that after explaining consolidation and what? Accumulation. So what? Afterwards, this high was taken out. We have what? A new high at this point. A new high at this point. And what did you see? Price still came back to what? Take out this high. This tells you that what? Overall, the price is what? Bullish. In as much as you're having all of these pullbacks. And that is why what? I'm explaining this structure. Because what? After the structure, we will be going right into the chart works. And if you don't actually understand structure, please, I will want you to actually what? When we are done with today's section, take your time. Tomorrow there is no class. Take your time, go through the video, and what? Open your chart by your side and what? Practice it. Because the only way you can actually what? Improve in this skill is what? By practicing. Even if I should take the whole day or the whole year explain and you don't practice yourself, it will still make a difference. So you have to practice. You have to be dedicated. You have me here to always what? Answer you. You can always text me and I'm always there to reply. Alright, so the next thing we'll be looking at is what? Consolidating market. Consolidating market. And we said what? A consolidating market is what? A ranging market. There is no clear direction. The price is just ranging from one point to another. Forward, maybe you will not have a clear direction to the upside or a clear direction to the downside based on what? News event or what? Institution. The market is majorly controlled by what? The institutions, not by what? Yeah, $10 and $2. That has no effect on the market. All right, so you have to think smart. You have to be very, very calculative. So seeing a pattern like this, when you have something like this, you have no business with the market. Now, let's get to look at the chart to actually see what a consolidating market looks like. Let me actually see if I can actually find one. Alright, so yes, you're not supposed to trade a consolidating market. You have no business with it. You're not supposed to trade a consolidating market. Okay, now let me give you an example. Look at, you have something like this here. Just take a look at the box I just highlighted, please. Alright, so I believe we all saw the point I highlighted. So let me take it off now so we get to actually see what I want to explain. So let me just put this line here. Okay, so let's use this in marking it. And we have this. Alright, so if you see within this point, when the price pushed into this point, the price moved down, it moved up, moved down, moved up, moved down, moved up. There was no clear price movement. If you look at what you have here, if you look at this point, the market was moving, and you can see what the strength the market was moving with. Then when it got to this point, it was like there was no longer strength in the market within this point. There was no strength in the market. So when you have this type of structure, you don't need to click a buy or you don't need to click a sell, because at this point the market is what? Indecisive. It's indecisive. So what? Coming to see something like this, you just have to just maybe mark your setup, or you just sit back, look at other pairs, or get yourself engaged with other physical activities. Why what? You just allow the market do its thing. Now, let's say, okay, when you came, you saw this point, you didn't see any reason to buy because what you're very that this is like a ranging market. You just sit out, wait till maybe the market takes out this low. Now this market took out this low. Now look at the strength the market used in coming down, and look at all of this. This was like a chubby movement, and look at this point. You will not say that okay, there's present of what momentum. Sellers are now in the market. The situation is now what in the market because what, did you see how it sold off? See the price leg. At this point, you had another accumulation. Then the price dropped again. So what that's why you have to actually what avoid a consolidating market, because if you don't avoid a consolidating market, a lot of times you end up taking stop losses for your own impatience. Because what the way I see trading, I see it as money being transferred from the impatient ones to the patient ones. How do you trade, or how do you feel actually what taking just one trade in a week? It's boring, right? How do you feel taking 2 trades in a week? It's boring, right? But that is where the actual profitability comes in. I'm not saying if you're able to get good setup every day that you will not be a profitable. No. But a lot of times over trading is not good. It's not good because what? It will want you to see things you're not actually seeing. You want to click what is not there on the chart. You want to, okay, let me say, okay, you came in here, you were able to take a buy, the market pushed up, and immediately pushed up, you felt like, okay, the market was buying on retracement, you want to take another buy, you will not end up taking a stop loss. And not be like, when I take a buy, the market goes against me, when I take a sell, it goes against me. No. You were not able to actually what set rules. You were not able to actually what set clear distinctions between what to trade and what not to trade. You mustn't click buys every day. You mustn't click sells every day. Okay, we went live yesterday on this channel with what my normal live sections, and what basically what do we do? We do what chart breakdown. It's every Monday by 7 a.m. So now we actually call that a BTC buy. The BTC. Okay, let me just show you something. And that was the only trade we actually what called out on what our Telegram channel. Let me get to show us this chart. So you get to actually see that what you mustn't get to trade every day. All right, so this was the chart. This was the chart. And for people that actually joined the live section, I think some persons should still be on this be for this class. During the live section, I explained to them that what you have no business taking a buy at this point or at this point, because what we have this zone. How was I able to actually understand? Now, I was seeing news yesterday, how many billion, how many $1,000 was wiped out from the market. I wasn't panicked because what I've already understood that what we have what a trend line liquidity here, and I want this market. You can actually see what I actually drew. Well, as when we analyze this pair, the market, this was where the price was. So it's not like maybe I will say, okay, this is something I'm coming to draw now because this is the class. You can actually check the live section we had when I was actually what explain all of this. And for those that actually joined the live session, they will see that what I called out this trade. We had Ethereum trade, we had what SO trade, and other ones. So we don't just come to the market and we just click buy or sell. There should be a reason. Okay, we had a break of structure here. Market push to the upside. We also have market taking at this high. People will be looking at to buy for here. People will be looking at to buy here. But what? We were not looking for anything buy here because what? We know there is a zone here. How was I able to know there was a zone here? Because what? It's from practicing. It's from mastering. And that is what exactly I'm transferring to you. Yeah, a lot of persons say mentors don't give out what they know. I got seen. I will give you what I know. I will give you what I know. And I want you to be the best. If you only grind and what, do what is required of you to. Alright, so let me get to also show you what we had on Solana. I think I haven't checked the chart since after that live section. Alright. Are you seeing clean setup? I think, okay, Clinton, yes, he said that's true. Yes, you actually joined the live section, yeah, because I think I saw your comment yesterday. Yes, yesterday, yes, on Tuesday, yes, that's when we held this thing because I couldn't hold it on Monday. So now you can actually see how did I know price was going to reverse from this point. It's not magical. Though we have what? You have a break of structure here. There's a zone here, right? There was also a zone here that price tapped into. Why didn't I trade from any of this zone? Why this zone? All of those things will actually be given out in this class. Liquidity is resting. That's it, Prince David. You're actually able to understand the concept. Liquidity. So what? That is why I say the money is being transferred from the impatient to the patient. Because what? If you don't actually understand where the liquidity is, then you are the liquidity. And that is why you have to understand your structure. That is why you have to understand your structure. So I don't actually want you to miss out on any piece. Trading needs dedication. Trading needs your time. You have to be willing to put in all of those time. I think we also have something on Ethereum. Okay, so this was the Ethereum chart. If you see the first zone, this was what I was trying to explain during the live section that yesterday, and I was telling them that what you see this point, you have no business buying. You see the line below, that is what your liquidity. All of what you have there was what your liquidity pool, and what I was expecting the price to actually what get to this zone before what reacting to the upside. But I know why the price actually what reacted from this zone when you also have a sweep of liquidity. But that's not what we are discussing now. I just actually wanted to just maybe show you that what we are actually explaining here, if you take it serious, then what? It's something you've done so good for yourself. This is a free class. And because it's free doesn't mean I'm coming to just teach you the basics. I'm giving you everything. So do well to take good opportunity of this. People that are very, very close to me, or people that usually attend my live section every Monday, they know that what I don't come to cap. If I come and I tell you mark this point, is this point. If it comes to be a stop loss, no problem. But you will not see me click buy or sell every day. I take some time, maybe 1 or 3 trades in a week. How do we identify liquidity? We don't need to fast forward the class. Today we are on market structure. So we are on market structure, and I'm able to actually understand what the uptrend or what the bullish market structure, the bearish market structure, and what the accumulating, the ranging, and consolidation. What I just mentioned now is what one, but what they have different names. You missed out on the consolidation. No, if you missed out, that's why the class is being held on YouTube here, because what it will be recorded and uploaded here. So you can always check back on the channel. Anything you get to miss, just do where to. After the classes, after we are done, just go back, take your time, watch, and while you're watching, keep your tab or PC or whatever you're using to practice whatever we did, your notes, to actually what follow up. And as you're watching, you're also writing down or drawing those diagrams, because what these are things you'll be interacting with daily. There is no magic, and no one is coming to save you. It's you and that chat. The numbers of accounts will blow. It's coming. So get ready. All right. So we'll actually be able to actually explain the bullish structure, the bearish structure, consolidating market. So the next thing I want us to look at is what a lot of persons will be asking question: why are you not marking every little movement? So let me get to clear this off, and okay, so now do we consider all of these chubby movement, or we see them as what one move? We see them as one move. Do we see them as one move? Yeah. We mark our chart in what market waves. Now, what I mean by market waves is, okay, let me get to explain. So, looking at this chart here, looking at this chart, you see a lot of times, a lot of persons will come do, we had a break, we had a break. I'm not a finance student, and that's why you don't see me design my chart so much. We have what? We have a break. I know most people that get to join my live session will be like, this guy doesn't get to design his chart or all of those things. No. Understand the concept and leave design of chart for finance students. Okay, so at this point, you see we have this break. You have this break. This is what a bullish structure. The market is moving to the upside. No doubt, the market is moving to the upside. But do you have all of the time to be marking all of this? Sometimes no. And there's no point. For me personally, if I'm actually marking my chart for personal use, I don't get to even mark all of these things. I just mark my zone and I place my trade. I only get to mark these zones if I'm sending a chart to someone. So the person is able to actually understand why I have that structure. Okay, coming to the question Clinton is asking, I have a question though. How do I determine a clear market structure break? Because some chart can look funny. No, definitely. This is just introduction. This is just day one. That's how we have it in 3 months. The whole course is spread across. If we get to exhaust it before 3 months, depending on how fast everyone is catching or following up, because I don't want it to be something I'm going to watch. Even though I will have actually was scheduled the classes to be daily, but I don't want it to be so hectic. I want people should be able to actually focus on other things. All right, so at this point, you mark your chart in waves. Now, when you're talking about waves, you're marking in in kind of like in a lengthy way, not like or taking note of my mark. It's not like we don't take note of every little details, but I can't come and be sitting down to mark all of this as my little break or structure. I can just come, maybe mark this one, and I mark this one as my break or structure. So the price movement is marked. Let's say something like this, from here to this point is one leg of price. That's how I want to mark it. We have this one, we have this, we have this, and what? Now let me get to push this forward so we get to understand. So if I should follow the way this chart is marked, I should actually follow the way this chart is marked. What can you see? We see from here is what? From this point to this point is 1. We now have 2, 3, 4, and what? 5. 5. Yes, I understand not everyone is actually a fast learner, and that's why I asked if the class should be recorded. So the class is, as we are studying now, the class is being recorded. So after now, once the live session ends, I will get to upload it on the channel so that what you can always visit the chat, the class. I think I'm going to edit this title to indicate market structure mastering beginner to advanced, then maybe day 1. So when you come to the channel, you actually understand the particular video you're coming to watch. Once you see the day 1, the day 2, you understand that okay, this is the the class that we're actually taking. Now you can decide to actually check the playlist. I've already created a playlist that the whole classes that will be recorded will be added to. So whoever is actually coming to watch the video will actually understand the first class we took. You actually follow it in that sequence. So it's like you can always visit the channel. It's documented here online, so you can always visit or always have access to them. So when you come, it's not being mixed with other videos. You see the title and you see the playlist. The playlist is already created, so just go to playlist on the channel and you will see the playlist there. The playlist is, I think I titled it classes. I will check it later though and share it on the group. All right. So as I was explaining, the chart is actually marked in what? Waves. So you can actually see from this all of this one to this point is one leg, or let's say one movement is considered as one. I don't want to come and start labeling all of this. So this is one movement. This price retraced to this point, and to this point. That's what one movement. So you actually have to put the chart in what waves than actually marking it in smaller portions. All right, so now let's look at something that have more data, maybe to the downside. Okay, I think I see more. So you can see from this one, we have this to this point, this to this point, this to this point. With this, if you're able to actually put your chart in waves, because when you open your chart, the first thing you want to see is what you want to look at the structure. And from what I explained, I told you what you should always mark your range, the high and the low. You actually get to understand if you're in a bullish. So me looking at this chart, me looking at this chart, or me looking at this waves pattern I just marked, you already know that what this market is what in a bullish scenario. You want to be looking at for what buys. You have no business looking for sales. See, the problem a lot of people get to have is what you are in a bullish market and you now be like, I want to just take a quick scalp. What are you taking a quick scalp for? My dear, you don't need that. Stay out and what focus on what matters. If you're looking for a quick sell, I don't know if I should say that's the devil actually speaking to you, because you're seeing the market pumping, and why are you looking at for sales? Do you want to just hit your stop loss for no reason? Come on. Why? That's money you're giving to the market. So why will you actually work for like 30 days for people that work 30 days work, and you now come and donate the money to your stop loss? Come on now. Make good use of your senses. So if you're in a bullish market, only look out for what? Buys to the upside. So let's look out for a sell wave to the downside. A sell wave to the downside. I think this is not enough data, but let's get to use this. So you have this to this point, you have this, and what you have this to the downside. So at this point, you're looking out for what? You're looking out for just sells. You're looking out for just sells. So we've looked at the three structures, and I gave you a clear definition of what is market structure. I just say the moves in the market, the market movement. That is market structure. How the market behaves. Is it selling? Is it buying? Is it just ranging? That is what we mean by what? Market structure. Market structure. All right. So we'll be looking at structure on different time frame. Structure on different time frame. And on this time frame, I want us to look at the 4 hours. I want us to look at the 1 hour. I want us to look at maybe the 2 hours. Now we'll just look at the structure, what it looks like on different time frame, and why you need different time frame structures. So let's put this chart on 4 hours. For those that joined earlier, I told you what when the chart is on 4 hours, what does it mean? It means what each of the candle represents 4 hours. So now let me get to explain what I actually meant by that. So you can see this, my black candle. You can see this, my black candle. And what can you see? It means this entire candle, including the wick, whatever happened on this candle, took 4 hours. It took 4 hours. So this is 4 hours. This is 4 hours. This is 4 hours. I don't know if it make any sense. Now, okay, let's get to do something so you get to actually maybe understand what I mean by 4 hours. So let me see if I'm able to get a clear. I know this will actually work better self. But if you see from this mark, let's say we have the first 4 hours, the second one, and the third one that is still forming. It's not yet completed. So this is 4 hours, 4 hours. Let's just assume we're working with 4 hours, 4 hours. This is 8 plus this 4, let's say 12. So basically, if we should put this candle on 1 hour, we want to see like up to 12 candles. But definitely we'll not have up to 12 candles because we don't have the last one formed yet. So we should be having like maybe there about 8 to 10. Let's just work with 8 to 10. So let me put this on 1 hour so you get to actually see. All right, so this is on the 1 hour. This is on the 1 hour, so you can see 1, 2, 3, 4, 5, 6, 7, 8, 9. 9. So you can actually see that what we had 3 4-hour candle, and putting it here, I didn't say exactly if, the third one hasn't formed yet. So that's I said we'll be working with at least 8 to 10, and you can see within that range. Putting it on the 1 hour, we're having what? One. Let me take this out. But we already know the origin. Alright, so I think this was the origin. 1, 2, 3, 4, 5, 6, 7, 8. What's that? Okay, 1, 2, 3, 4, 5, 6, 7, 8. I think this should be included, yeah? Or let's just work with the 8. Let's just work with the 8. But now you now see that what 4 hours candle was now converted to 1 hour, and you're not seeing that you're having a whole lot of candlestick. So different time frame actually would give you a different look. Different time frame will give you a different look of what the market looks like. So let's put this on 4 hours, then we'll get to what? Look at what? A structure. Let's get to look at the structure so you get to actually understand what the example looks like. Alright, so looking at this structure on the 4 hours, looking at this structure, this is what you have. You have this high taking out, have another high taking out. What you have here is sweep. On the 4 hours is showing as what? A sweep, or maybe on the 1 hour it might be what? A break. I will get to also explain all of this in the coming classes. So you have a sweep. So let's just assume we are working with this high, so this high at this point, this high at this point. So let's put the chart on 1 hour now. So sorry. So on these 4 hours, you can see that the price is still what? Bullish. You get? Now on these 4 hours, you see there's this massive sell to the downside. There's this massive sell to the downside. But this doesn't reflect that you're in a bearish market. You're in a bullish market. This is what I was actually explaining, that what? Even if the market should drop from this point to this point, Ethereum is bullish. It's crazy, right? Ethereum is bullish. Now, excuse, you won't actually understand why I say Ethereum is bullish till you start what? Trading, or you actually get to understand. Okay, so now moving forward, let's put this chart on the 1 hour. Let's put it on 1 hour because I actually want us to cover what we have for today. So let's put it on 1 hour. Now, so this was what I was actually explaining, that on the 4 hours, here was what? A sweep. But what do you see on the 1 hour is what? A break. A break to the upside. What you have here is what? A break, and what? Giving you what? This what? Low. So within this point to this point, this has already told you that what? Or giving a confirmation that what? The market is now what? The market is now what? Bearish. But on the 4 hours, the market is what? Bullish. So the time frame you're actually using to look at the price chart is what will actually what? Give you what you should be trading with. But what? Overall, it's actually good you actually what? Look at multi time frames. Look at the 4 hours, the 2 hours, the 1 hour before you get down to, for those that maybe on this call that they like sniper entry, those that trade 1 minute. I don't do that here. We don't do that here. We don't trade 1 minute. Least will go down to is 15 minutes or 5 minutes. So for those that like to snipe, they want to do 1:100. So, but still, it's very okay. Actually, what go from the 4 hours down to the 1 hour. Yes, definitely blessed. A break of structure or change of character It's still on our curriculum as a topic. So when we get to that point, we'll actually get to understand. But I just want you to actually understand the structure, because without this particular topic, we can't do anything. If you don't understand the structure, you won't actually understand why we're actually picking a buy or why we're actually picking a sell. That's why we have to introduce the concept of market structure. You understanding the direction of the flow, where the market is trading to, the trend of the market. Is it trending bearish, bullish, or the market is just ranging? Now, so that's it. So now we'll be looking at what the next topic under market structure, the subtopic we'll be looking at for today. For today is what? Internal and external structure. Internal and external structure. I believe we all heard me. Are we following? Let me know in the comment section if you're actually following, and yes, following, please. Let me know in the comment section. I said the next topic is what? Internal and external structure. Please, if you're still following and you're active, let me know in the comment section. Okay, so we're active. Okay, we're active. All right, so now when we are talking about what? Internal what? And external structure. When we talk about internal and what? External structure. Basically what you're looking at what is what? Just like as the word implies, external and what? Internal. Just like WAEC, when you hear something like external invigilators are coming, and what's your internal, also for what? Internal defense and external what? This thing. So all right, so now you have the structure, and what? You have the structure. Now, for those that are not, for those that are familiar with the chart, you know that what? The chart doesn't look this clean. I think that's the issue where what? Or that's the issue beginners have or newbies have. They think that what? The chart will look so clean. You will just see an uptrend market that will just go so straight. No. So now you have this point. When you have this point and you have this low, have this low, this price doesn't just move this way. What happens on the lower time frame? Let me say, after this price moves down to this point, what you will see is what? You will see smaller movement. This is what you will be seeing. See, you will get to this point. But when you put it on a bigger time frame, what you will see is what? It will look like the chart is just straight. It's a vertical line towards to the upside. That is what the chart will look like. But on a smaller time frame, a lot of things happens behind the scene. It's just like we're growing in life. We went through what? Pre-nursery. Let me say, for people that went through creche, pre-nursery, nursery, and nursery 1, and nursery 2, basic 1, depending. Different schools have what they call theirs. Then you now come to JSS1, year 1, and all of those things. So now, but when you want to analyze all of those things, you don't come to start. You will just be like, I went through a primary school, I went through a secondary school, and I went through a secondary school, and I went through a tertiary institution. Now, you'll be able to classify all the classes you went through into just 3 short stuff: primary, secondary, and what? Tertiary. So that's basically what happens on the chart. Okay, now let's get to look at this chart example to actually what? See this. All right, so within this point, if I'm not mistaken, we don't have up to like 20 candles, but let's say, okay, assume we have up to 20 candles here. Now let me take this chart to a lower time frame. So maybe like 15 minutes or 30 minutes. Then you get to actually see what I'm explaining. Look at this point. Or no. Okay. Let's look at this one that is straight to the downside, heading to the downside. Now, let's actually look at this. Let's put it on. Let me mark it. So actually I would have a clear understanding. Look at this. And let's maybe use this point. Let's maybe use this point. All right, so put this on a 15 minutes. Put this on a 15 minutes. Okay, on a 15 minutes is still looking okay. On a 15 minutes is still this is still looking okay. Let's step it down to like a 5 minutes to actually see. I actually want us to understand something. All right, I think I'm having something I'm actually looking at for. So now, on the 1 hour, it was just like there are about 2 candles. But what do you see on this one? You're seeing a whole lot of candles gathering. So what did you see? There was a move to this downside, and what the market moved up. But on the 1 hour, there was this thing show. Now this moved up. The market then dropped down. It moved up. It dropped down. Moved up. Dropped down. Then moved up. That's what the 15 minutes is showing. But what if you go to the 1 hour? If you go to the 1 hour, what did you see? Let's look at the 1 hour. So looking at the 1 hour, what did you see? You saw 1, 2, 3, 3 candles, and it was just what? A straight movement to the downside. So this is the clear definition or clear explanation that what market moves in what internal and external phases. So if you have this high and you have this low, whatever happens within this price range, let me get to this here. So this low here, this low here, this low, and what? This high. Whatever happens within this point till this point is what? Internal move. If this market, let's say we are looking at for buys. Now this market has actually what? Taken out the last high at that point. So this is just for example's sake. I'm not analyzing the chart at this point. So at this point, if this price pulls back here, what we want to see is what? It should be able to continue to the upside. Pulls back down, it should be able to continue to the upside. Pulls back down, it should be able to continue to the upside. That is what we want to keep seeing. So whatever is happening within this line to this line, on this right hand side, is internal price action. When it becomes external, is when this high is taken out. So if this price now takes out this point, it means what? The external high has been taken out. All of this will actually makes a lot of sense when we actually would start taking trades or actually start doing real life examples or actually what marking our charts together. So if this is taken out, then you now have what? Internal what? The external high what? Taken out. Now if you have this one, if this price takes out this low, then it means what? The low is taken out. That means you now have what? A new trading range you want to look at for. I believe this is understood and taken. And if you have an issue, that's why the video is being uploaded here on YouTube. So you can always what? Make reference back to it. To always what? Check out what you need to know and what you don't understand. So while you're watching, make sure you have your jotter by your side, because what? You need to be making your sketches and you need to what? Be revising them. So we'll call it a day at this point. But I want to actually tell you something. You've begun this journey today. It's a free training. It's a free opportunity. And I don't want you to take it for granted. For those that actually know me very well, they know what I charge for my class is $100. And if you should DM me privately that you want a one-on-one class, it's $100. So make sure you get to make good use of this because if you are done with this class and you still don't understand what chart analysis or understanding what how to analyze the chart yourself, you have to go and pay someone. That's the truth because it's hard for you to actually see this opportunity for free. So do well to make good use of this class. You are getting everything for free. You are not paying a dime, not even data. I don't need it from you. Just make good use of this opportunity before you. All right, so you said, okay, please can I do a recap on the internal and external structure? Okay, now, let's look for, let me look for another, okay, let me just, I have one here. So I'm working with this high, I'm working with this high, and I'm working with this low, I'm working with this low. All right, so let's say this is the high and what? This is the low. And from what I explained, I said whatever happens at the left hand side is what? Internal price. So at this point, you don't want to see this price violate this low to maintain the internal structure, and you don't want to see it violate this point to maintain the internal structure. So basically, what the internal price is what happens within this point? Let me say you have this point, the market pulled down, it came up, it pulled back down, came up, pulled back down, till to this point. Whatever happens before breaking this high is internal. Now, if it breaks beyond this, then what is not external? Now, look at it. Look at this high. What happened? Price took out this point. For price to take out this point, what you now have is what? External high has been taken out. If price takes out this low, then what? The external low has been taken out. Now, let me look for a kind of like more complex example because that will actually what give you a better understanding of what I'm explaining here. Let me look for a better complex example. Okay, I think I have one here. Let's say this is this high. This is this high. Now, this was where what this move initiated, and where did it stop? This was where the low was created. This was where the low was created. See, this thing I'm actually teaching you now is the basics to whatever you'll be doing in future. Like whatever you'll be doing on this trading class or your personal chart analysis is very, very important now because that's what will actually help you to understand if the market is bullish or the market is bearish. If you don't understand the structure, you will not be able to actually even understand when the market has turned bearish or bullish. Now we have this structure and we have this. Where is the internal structure? At this price moved, gave you this high. After giving you this high, this price moved here. It moved up, it pulled back down, it moved up. All of what was happening within this point is internal. All of what was happening here. So within this point, sorry. So within this high and within this low, whatever was happening within this point is internal play. The market has not done anything external. The market has not moved differently. It's just like, let me say, you can have daily bearish, substructure bullish. Let's assume this was like our 4 hours time frame. Now this is your 1 hour time frame. So on your 1 hour, you're bullish. So if you're actually, let me say you're taking a buy from this point, let me say you took this buy, where you want to close this, you want to close at this zone, because here is a supply zone. This is a supply zone that you want to either see price react to and what, sell down. So that's what your internal structure is all about. So if this price now takes out this point, then this has been taken out. This now gives you a bolder confirmation that what, the market is now bullish. Whatever you had within this point was just internal price what, bullish movement. I don't even advise you to actually take that trade if you don't actually understand how it works. But when you have this market breaking above this one, this is what now gives you the confirmation that what, this market is bullish. So what you want to see next is, you want to see this price correcting back into origin and what, continue to the upside. Okay, let me look at the comments. Sir, is there a similarity between internal structure and accumulation? Okay, so let's from this particular example, let's say something like, because I don't want to answer you directly. I want us always look at the charts together. So let's say this is our trading range, this high and this low. So we can say that internal structure is just like an accumulation within what, the main structure, if that makes sense to you. We can say that the internal movement is like what, an accumulation, because what, you're actually trading within a range, not the range I taught you at first, but this other range, it's like you already know what you're doing and you know why you're taking that trade. And I'll actually teach you how to actually what, trade the internal structure and the external structure when we get to all of those points. In this class, everything will be explained, like everything will be well detailed. And I don't expect anybody to finish from this class and say he or she still have an issue with technical analysis. If you still have issue, I will gladly take the $100 from you, since you're not able to take mine from me for free. So basically, the internal structure is like an accumulation within the external structure. So that's it. So we have a 6 minutes to 9:30. So I want to entertain more questions. So let's keep our questions coming. Let's work it out together. And if you haven't given me a thumbs up on this live section, please do it to like this section. Do it to leave a like for me, please. It's very, very important. All right, so more questions. 5 minutes to go. Let's attend to questions. Is there anything you don't actually understand and you want me to actually throw more light on? Let me know. Any question? Any question? You're already saying onto day 2. Let's end this one first. What do people have questions? Let them ask their questions. Let them ask their questions so that what? Let's be sure we are all on the same page. We are all on the same page so that when we are crossing to day 2, we don't have anything pulling us back. Because on day 2, that's a different topic. We are not taking market structure again. If you have issues with market structure, what you have to do is what? Come to the channel, do a recap of the video, take your time, watch through, and get the knowledge. I deserve more than a thumbs up. You can ask for my address. You can ask for my address. I won't say no. I won't say no. See, one thing people don't actually understand is people feel like because if you have and someone lower than you want to gift you, you should turn them down. No. Don't make them feel bad. Accept it from them. So if you have your 1K you want to send to me, definitely I will give you my account number. I will take it from you. It doesn't mean maybe I don't have it to afford or something, but I want you to be happy. Because if I say no, it will look like pride or something. Which one is animal information? The video will be. Please, let's not use a rude comment, please. So does that mean my question stand now? And Clinton, please, what was the question again? Can you resend the question? Can you resend the question, please, so I get to actually understand? All right, so I believe maybe after you've gone through this video, maybe later, maybe this night or tomorrow, I know a lot of people will actually come back to actually watch the video again tonight to actually get a better understanding, because that's it. If you leave it that you want to watch it like after 2 days, come on, a lot of things will skip. Okay, how to actually on okay no the topic we're having on day 2 by Friday is break of structure and change of character. Break of structure and change of character, and you know very well, you've always been attending my lesson, you know that what is the best. So I'm going to give you the best explanation and the best analysis to actually what getting break of structure, change of character, fake out, fake break of structure or manipulative break of structure, all of those things I'll be giving you out. I'll be giving you out both bullish and bearish markets. Okay. So I'll be giving you out. So uh every morning, like we'll be giving like 1 hour. The group will be open for each day's class. Like for those that attended today's class, or for anybody that is watching this class that will watch to the end to actually hear this comment I'm actually making. Because a lot of things is, a lot of times people don't actually take time to actually study. People don't like taking time to actually study. They want to make money, but they don't want to go through the process. So the WhatsApp group will be open tomorrow morning for 1 hour or more. Once the group is open, I will drop a message. Drop the questions you have concerning today's class. Nobody should come to ask something abstract. Please, I believe you're all matured and we are above 18 here. So let's act mature, and I will also treat everyone a mature way. So all you just have to do is drop your questions, and I will lock the group and attend to them. Please, the group is not over spammed. A lot of persons were coming to my DM after I made an announcement of when the class will be starting to actually be asking me questions. That's why the group was created, for easy communication. So always do well, please, to always read messages on the group. I don't over spam the group. I know why I don't send so many messages, so that a lot of persons will not be like, over how many messages, I can't read all of those things. And why will you even join something you can't take your time to read through? It's very, very important. You have to be dedicated. Dedicate these 3 months and see your next year change or turn around. So the chats are really confusing, but I will go through the class. Yeah, Williams, Amadi, please do well to actually go through the chat. Yes, definitely it's going to be very, very confusing. And that's I'm making it very beginner friendly. If this was like a master or advanced class you paid for, I won't come sitting down to actually explain chat and all those things. I'll just go straight to hitting the news. Basically how to take your trade, how to actually analyze. So this is just like a very beginner friendly. So just please do well to actually take your time after now, watch the video and absorb it. That is why I said I'll open the group tomorrow morning and tomorrow evening, possibly, for you, because I know that by the time a lot of persons don't have question, but when you go back and actually watch, that's when you actually understand that you didn't actually understand, or you didn't actually assimilate as you thought you did. So the group will be open tomorrow morning for those that maybe watched this night or actually gone back to do a review. So you come to the group, ask your question. I will log the group and I will answer them personally one by one. So do well to follow up. If you don't want to miss out, do well to follow up. I know what I'm telling you. If you don't take good use of this opportunity now, you will go somewhere else, or you will come to me to pay your $100. There is no difference between what I teach in my class. This is exactly everything I'm giving. Because what? I want to give her the best. So we'll call it a night. And please, if you've not actually given me a thumbs up for this live section, do that for me before you get to go. Do that for me. Do that for me. So we'll end it here. As I said 1 hour 30 minutes. We are not going more than that, so that what other people can actually what continue with the rest of their days or focus on other things. Maybe those that wants to go for dinner or something. So we'll be ending it here tonight. So good night, everyone. And I want to see in the comment section everyone saying good night. So let me know if you actually enjoyed today's class. Give your review, what you actually learned. Let me know in the comment section. I'll go through the comments later and actually get to respond to questions or those that are able to leave a comment behind for me. And I will also leave you a comment behind. Yeah. Good night, Teddy. Pray said thank you. Clinton said good night, Chief. Favor said thank you. Thank you, sir. Thank you. Thank you. Blessed said good night, sir. Good night. Wonderful. Good night. Good night. Good night. So thank you. And I'm so happy we were able to kickstart in this way. So keep same energy coming. Keep the flow going. And definitely you will see the improvement on your own end. So that's all for now. Thank you and God bless you all. Good night.